Alrighty, good morning, everybody. We're finally to Wednesday, the day we've been waiting for all week. So it is Wednesday, July 27th, 2022. We have the Fed announcement this afternoon. If you're on the East Coast, probably more midday here on the Pacific. So again, the question's going to be here: are we going to stay sideways until that announcement, or are they going to start to make this move in anticipation of what they think the Fed's going to be doing here? So there's two things I want to quickly talk about that are very important here. I'll just use the 10-minute chart to go back to yesterday and just point out that, again, if you have our holy orange power level, you have our daily power levels indicator. If you were in here yesterday morning, you could have took a short right off the OPL, and that's all you had to do. Now, I mean, we didn't start trading till 6:30 at the open, so we missed out on that play. In fact, this was before we even did our pre-market session yesterday. You missed out, but if you had this indicator on your chart and you were there, that would have been a beautiful trade. And I'm telling you that this holy orange power level, there's a reason I call it holy. It's because it's almost like it's not every day. In fact, there might be a few days in a row where things just don't work out off of it. But over and over again, if you just look back statistically, there's an edge to that level. And a lot of times this is exactly what happens, whether it's an hour before the open or it's somewhere after the open or somewhere midday. But we see the market come right to that level, hit it literally to the tick. In this case, I think it went one tick through it, which is a good thing if you want to get filled, and then failed, and that would have been your trade of the day. Getting short at the OPL, and then going right to our expected support zone, 16.5 to 22, where the market literally went right to and attempted to bounce back out, but then we got the failure right at VWAP again. So beautiful trade off the OPL. It just happened to be an hour too early for us. But again, we see this happen all the time. A lot of times we see the market break through the OPL, come up, break up above it, and then pull right back to it, hit it to the tick. Ask anyone who's been here for a little bit of time, and then bounce right off of it, and ends up being the best trade of the day. So that was the first thing I wanted to note here. Second thing I want to note, and we might want to go up to the 60-minute chart here to get the zoomed out perspective of what's going on here. And I want to give you a little quick master class in Fibonacci. I just want to show you how amazing the Fibonacci ratios work here in the market every single day. So let's look at this. So remember we talked about this leg from this major low, this bounce right, and again, right off of one of our major eye levels to the tick. The market came right to 38.22, off of a pretty appreciable pullback. In fact, I didn't even look at this leg, but it's probably right around the 50 to 38 there. So it bounced maybe 2 points, 3 points in front of the 50 there and started ripping. So we got a new leg, and I want to show you here over the last few days what happened, right? So we've got this new bounce off 38.22. You throw the fib up, and you can see where I drew it here, basically from that major low, somewhere around 38.20, 38.21 there, all the way up to the major high that we made. And again, I have to just pat ourselves on the back. Where was the major high a few days ago, last Friday? Right off of a level that we had marked, like almost to the tick. I think it broke it by one tick, and then we failed. So if you throw a fib up, you get three major retracement levels. You have your 38, your 50, and your 61. Well, take a look. The market bounced to the tick off the 38% retracement of the leg that I just mentioned. Okay, they tried to break out to the upside, and then look where the market failed. Okay, so this was one of our levels, so it did fail right off of one of our levels as well. But look at the fib retracement from 16.25, the high of Friday, down to the low here on the pullback, which was again that 38% retracement of this whole push up. You draw a fib down like that, and look where the market bounced up to and failed. This 61.8 retracement almost to the tick, which again was our level that we had marked on the chart for a few weeks now, but right into those two levels and failed. Okay, now look at this. From the high at 16.25, we came down and we made a new low yesterday, and I think I just clicked the wrong button there, so let me get rid of that. So from 16 quarter, let's see if I can get that all the way down to the low we made last night or yesterday. And right now we're coming right into the 50% retracement here. Got a little peek through it. And now, the question's going to be, are the bulls going to pull back from that now and come back down? Or are the bulls just going to kind of hold this up to come maybe a little bit further? And look, the 61.8 I marked here this morning, right here at 39.77. So that would be that 61.8 retracement. If we do start to push back up, that would be a likely area of potential failure, just like over here when we pushed down, made the low, bounced back up and failed right off the 61.8 over here. All right, so there's a lot of beautiful, and it's more like what's the word for it? Like an exhibition, or like it's like a beautiful example of why fibs continue to work over and over again. And it doesn't matter if you're looking at a large leg or you're looking at a little tiny leg, say like from the previous daily high to the previous daily low. These fibs, for whatever reason, just seem to work over and over again. Another thing to note here, and I just want to go back to the larger leg right here from that 38.20.21 low off of our major eye level all the way up to 16 quarter. Look at what happened here. Came down again. We talked about this already. Bounced to the tick off the 38% retracement of this major leg, and then it came down. And where did we bounce yesterday? The market bounced right off the 50% retracement there. Do you see that line coming across inside of the shaded area there that ends right about right there? That is the 50% retracement. And if you look, the low of the morning was right off the 50. So it bounced off the 38. It pushed up. It failed at the 61.8 of the small leg down, and then came down and bounced right off the 50 of the larger leg. And then it tried to break out. There just wasn't enough bullish strength. And what they do? They did a little peek below and bounce. So they came into the 50% retracement and our little area here, 16.5 to 22, and then peeked through it by a few points and then bounced on up, and now we're coming back up. And remember what I said over here in our overnight session, we're failing, or at least we had trouble, and we're getting a pullback right off the 50% retracement of this whole sell-off from our local high at 16 quarter down to the low of yesterday. Right? So these fibs are just absolutely amazing. If that's the only thing that you use to orient yourself in the market and make trades, you can make it work so that you become a very successful trader. There are people that only trade fibs. So again, I just think it's beautiful stuff. I'm not, we'll just leave it at that. So this morning, that's kind of where we find ourselves. We're right up at about 50% retracement of the whole sell-off ever since we made that high at 16 quarter. And let's go up to the daily chart and just kind of take a zoomed out perspective, and then we'll talk about the levels that we have for this morning. So on the daily chart, let's see if I could zoom this in a little bit. I know there's a lot. Remember that all the lines for the major fibs, for this major swing high and lows, those are all printed on every chart. So unless I go back to my drawing tools and basically hide all these levels, just deal with the fact that we do have a few on there. So yesterday's candle, again, looking very, very bearish. Remember the day before that, we talked about this doji candle that was sitting here looking fairly ambivalent. But if we could break down through the low of that day, we were expecting the push right to the area where the market bounced yesterday. So our low of the day, we were off by 3 points, and that was our target to the downside. So we came in, we bounced in. Now, like I said, yesterday's candle looks, pretty bearish. Closed down at the major lows of the day. But now coming into this morning, it seems like there might be, again, an attempt by the bulls to push higher. And you guys know that almost every morning I tell you that even if there is a bullish push, I'm very skeptical of it getting far. So usually, even though it's pushing, we're looking for somewhere to short the market, or look for an area for it to fail and then jump in and get short for the pullback. Of course, that doesn't have to happen. We could get some type of major breakout here, especially with the Fed today. Who knows with that announcement what could happen. But yeah, there's the daily right there. We haven't pulled back deep enough to hit the 38 retracement of this whole push up from the July 14th lows all the way up to that 16 quarter high. So we haven't quite made it down to the 38 retracement of that just yet. And I think that's all I can say up here on the daily chart. Actually, one final thing. Remember that every time we get a daily signal, it typically can lead to 1, 2, 3, 400 point pushes in the market. And when they actually get follow through, and we still have this really strong bearish signal from the high off that 16 quarter back on Friday of last week. So that's still sitting there. And we did say coming into Monday, with that bearish signal, we could expect the market to continue to retrace back lower. And that's what's happened. Excuse me, Monday and Tuesday, we've sold off ever so slightly, but we have sold off. So again, this morning, the question will be, are the bears going to continue to take this lower, or are the bulls going to find recovery here and start to bring this back up? So let's look here. There's no other major signal outside of the bearish signal from the high of Friday of last week. So I don't have a nice daily bullish signal from yesterday's low. And on the 4-hour, we do. So remember, when we're looking at the confluence of different time frames, when we get a big move in the market, we have a daily, a 4-hour, and an hourly signal all lining up. In this case, off of yesterday's low, we don't necessarily have a nice strong daily, but we do have the 4-hour, we do have the hourly giving a good signal. So the question is going to be, from yesterday's low, from that bounce, are they going to continue to carry through with it, or are they going to lose their steam right at that 50% retracement level off the overnight high and start to come back? Again, there's probably a million different perspectives as to what could happen. All we can do is look for the most relevant levels in the market and basically ride the market back and forth between all those areas. So if we go down to the 60-minute here, remember that yesterday we said if they can break the low right here at 39.41, then we would expect a push down into 16.5 to 22, this shaded area right here, which again, if you look at my cursor, is also coming across as the 50% retracement level there. So that was our target. If we broke 40, we would be short down to 22 to 16. You would have gotten a beautiful trade if you somehow managed to get short there. And then again, like I said, it did do one of those peak below and bounces. So of course, they didn't make it easy for anyone who got long off of our expected support zone. They had to bounce it out by 10, 15 points there, 20 points, and then turn it around and break the low by 3 points to come down to 13 and then bring it back up. So they don't make it easy sometimes, but essentially exactly what we said yesterday was our plan is exactly what happened. And I'm telling you that this isn't like a fluke. This happens very often. It might not be every day, but I would say probably greater than 66% of the time. We're telling you what to do when levels break and where to target, and the market does exactly what we would expect off those levels. So let's look at this morning here. If the market continues to pull back, again, I'm not going to pontificate on every possible scenario here. We're just going to take it either to the upside or the downside. Excuse me. If we do pull back here, we're first of all, let me mention this. We're sitting right here in about 4 or 5 days worth of choppiness right here. So we did duck down and start to get a pullback, but they pushed it right back into literally right in the middle of the last 5 or 6 days of price action. In fact, I wouldn't be surprised if I went ahead and drew a volume profile across the last 5 or 6 days of price action. I would not be surprised to see the point of control sitting right where we're at right now. In fact, we have a few minutes. Why not just take a look? I'm usually pretty good with finding out the point of control without even looking at volume profile. But let's just, for shits and giggles, throw it up on here for this last 5 or 6 days. And there you have it. The point of control is sitting right here at 58. So we're basically right in the middle of a bunch of chop. Not necessarily my favorite area to be trading, as you guys know. So let's take a look here. I'm going to get rid of all that. What do we have above us? What do we have below us here to target on either side of things? So again, if the bulls rip this sucker higher here this morning and we can get through the overnight high, do not ignore the fact that the 61.8 retracement is sitting right there at 39.77. So we've got that. We've got the major eye level and the major retracement back up around 84 to 90 here. And then it's back up to all these same levels that we've been talking about. We've got the minor level, we've got the 2, this whole area here, 4030, 4016, 4006, and that 4023 minor eye level. This was a little zone in the market where we saw basically price bounce up within these areas for a while in a very tight congested zone here. The reason we have those levels on there is because that was the very distinct areas where the market was bouncing up and down from. And this goes back way, if I was able to zoom out all the way back to the beginning of June over here. So that whole area could very well continue to be trouble for the bulls as we push back up into there. So we've got, again, 4006, 4016, 4023, and 4030 there. That pocket still hasn't been broken. Remember, we came up, we failed off the first level and just in front of it. We came up, we failed almost to the tick off the second level. So you never know if we're going to just stair step up right to 4023 and fail, or come up into that 4030 and fail. Don't ignore that if we do get this push this morning. And then we have 4042 to 4044 here, a little 2-point pocket that again would make sense as another potential failure point for the bulls. Any further, and all the levels up top here we've already talked about. Major swing lows back. If you were trading with us a couple weeks ago, 74, we were on the other contract, but it was something like 40.71. The market was not breaking for like an entire week, and then eventually it finally broke through, and that's when we said, if we can break through 40.71, I think was the previous contract we were targeting down to these levels down here. So coming back up into basically an entire week of support could very well be trouble for the bulls as well here at 74. And then again, all the other major eye levels up above, major and minor eye levels, you should already have on your chart and already be aware of. And each one I'm going to treat as a potential failure point. On the other side of things here, if the bulls cannot get up through 39.77 for starters here this morning and get up through the highs of Monday, right around, again, amazingly, right around our major eye level and our major fib line, if they can't get through those areas and they do start to pull back, then you want to be targeting the areas down below. And let's just take a look here. I put the retracement here. This is the 61.8 retracement of this bounce, this leg from yesterday's low up to the high of the overnight session. Keep in mind, if we break the high of the overnight session, this fib leg will have to be redrawn to the new highs, which means that this level is going to have to shift. But for right now, assuming we don't break the high of the overnight session, we've got the 61.8 sitting there at 39.34. There's one other level I put on the chart that isn't one of our major or minor eye levels, or already a level that we have drawn on the chart from days and weeks before, and that is this major swing high back here around 39.38. And you know what's kind of interesting is I put my cursor there. I could have sworn it said 39.38. I might have to update this down to 37.5 just so it actually tags those highs. But that's the only other level I put on the chart that's new. So we've got that 39.37.5, 39.775-ish little area right there. And you can see that I shaded this whole area in as a potential support zone. And the reason being is because we do have that major swing high sitting there at around 38. We have 50% of yesterday. We have the close of yesterday. And then we have the retracement level, and we have the minor eye level all right there within a little, say, 3-point range. So we've got that. We've got that, again, that retracement level that could shift if we break the high of the overnight session. And then everything else below us here is going to be the same stuff that I've been talking about for a few days now. So again, the pocket 16.5 to 22, that pocket is the pocket that we essentially used as support yesterday. So we bounced right in the middle of it. Of course, like I said, they had to come back down and peak below to bounce it right up to where you would expect it to go if this area was to hold. So first got the bounce out of the area, no appreciable push. It was about 20 points, and then it came down 3 points through that pocket of support and then came back up. So if we can get through that area, get through the low of yesterday, all these levels down here you should have on your charts from the last few days and weeks of our pre-markets here. We've got a major swing at 39.09 half. We've got the major fib leg at 39.04 half, giving us a little pocket very similar to the 16 half to 22 area. And then from there, the next major retracement at 95, 38.95. And then everything down below here is I've been mentioning again for days and weeks. So we've got everything down there to target. So if we can break through the low of yesterday, there's a potential there could be some support between 09 and 04. If that doesn't hold, we're targeting down to 95, 75, 70, 53, and beyond. So it just keeps going. We've got the same stuff that I've been listing for days and weeks. So that's what we have for this morning. If we can break out through the overnight high, I'd be targeting up to 77, 84, 88, 97, and 06 here. And then if they can't, and they come down lower, I will be looking for potential support off of some of the shaded area here, off that 39, 34. And if that can't hold, then I would expect to be short down to all these levels down below. So the market is literally opening right now. Didn't realize we went off on a bit of a tangent there at the beginning. But we'll jump down to the members here and we'll see what we can get here coming into the open. So have a great day.